Hey guys, thank you for stopping by. Don't forget to subscribe, like, and share. And I hope you enjoyed this interview. All right, welcome back to the program. My guest is joining me right now, Mr. John Uwajumogu. He is the Special Advisor to the President on Industry, Trade, and Investment. Hello, John. Welcome to the program.
Hello, good morning.
Good morning. How are you?
Thank you to be here.
Now, we're looking at Nigeria's infrastructural challenges as well as opportunities. Of course, I've heard over the years that our infrastructure presents such a fantastic opportunity. That is infrastructural development, such a fantastic opportunity for investors to invest in. But I think let's start from the basis in terms of, because while I was even thinking of this program, I thought about data.
Right.
You know, how much is Nigeria's infrastructure worth? If it's like for an investor watching from outside, how much is our infrastructural stock, as it were? Is there a figure at that? And what also came to my mind is MOFI.
Right.
I was speaking with you just during the break. Ministry of Finance Incorporated. Many people don't even know there is a body like that. You know, and it was nice we both anchored the program. I think in February. I think the public wealth investment conference. So, do you have an idea?
Well, and I think this is a fantastic question. It's very relevant to the issues we're dealing with today, in the sense that there's this thing that anybody can tell you how much we owe, but we'll be unable to tell you how much we own. Oftentimes we can throw out figures around Nigeria's debt levels, but what do we have in terms of what is on the national balance sheet? And that's the premise for the public wealth conference that you and I anchored. And the reason was to shine a light on what I believe is the greatest assets that we have, which is assets that are in the public wealth domain, and be able to identify the challenges that have historically hindered us from utilizing those assets in driving economic growth. So directly to your question, we can ream out statistics around how much paved roads we have, lines of railway corridors that we have across the country, how much generation capacity we have. But what is that stock of infrastructure actually worth? And more importantly, how are we utilizing it to drive investment and economic growth? And the question is, given that a number of times these assets are within the public space and have not been structured in such a way where what is called third-party claims can be made to it, it is often difficult to be able to determine what the valuation of those assets in terms of the market values of those assets are today. I mean, we know how much we spent in building them, but over the years, those assets, when properly put into economic use, have multiple times the value of the amount that you put into it. Imagine Nigeria has about 3,000 or 4,000, I would say approximately 4,000 kilometers of railway. But what value do we put on that? Because that is not currently being, those assets are not in a corporate structure that could enable a market valuation of what that infrastructure stock is worth.
Why is it difficult for us to value our infrastructure? Because talking about infrastructure, ports, technology now, roads, power, and all of that, these are still infrastructure we spend money on every year.
Yes.
They have their line items on every year's budget.
Yes.
Yet we are unable to value, to say,
Right.
okay, I want to look at infrastructure stock for Nigeria, and I really can't seem to get it. As it were, even with the kind of show that I do here, that is, I'm so heavy on numbers and all of that. So why is it so difficult to get? Then the other question also will be, if you can't even get this data, what is the president, your master, doing abroad, going abroad to say, come invest in our country and all of that, where you can't really say, this is the amount of, this is it in Naira and Kobo. There's no Kobo in Naira.
Well, in recognition, in appreciation of that, of this issue that you just outlined, that is why the Ministry of Finance Incorporated is taking the lead in being able to define ways that can allow us to put that infrastructure on a balance sheet, and then thereby you can be able to determine the use values of this infrastructure, which would then enable you to determine what the market values should be. Now, for example, if you have an asset, one can tell you, like, for example, one can tell you what Heathrow is worth. Why? Because Heathrow, the governance structure and the way Heathrow has been structured enables it to be able to be valued by third-party firms. But when assets, and this for historical reasons, were developed and kept into under the custody or management of regulatory or policy-making agencies, they've not been operated in a way that reflects its commercial value, and have not been structured in a way that allow one to use the different methods of valuation beyond the cost method. And the cost method is really how much you spent on it to determine what the true market value of these assets are. So, but in an attempt to reverse that, the Ministry of Finance Incorporated was reconstituted, which for years was just a holding company and was a passive custodian, just essentially a holding company, but now have been made an active custodian and manager of Nigeria's assets. And with that will come with certain bookkeeping measures that needs to be done to properly structure a particular infrastructure assets and put them in a under a framework that makes it easy for third party, because what you're trying to do is like let third party be able to determine what the value of this asset is. Because if you're able to determine what the value of this asset is, then you can be able to securitize that asset to be able to draw in financial capital. So if so with that, the first step was doing the National Asset Register, which first of all curates and collates what we actually own. Because before you even begin to value what your infrastructure assets are, you need to even know what you own. Then after you've curated that, you now know what you own, is to then put them in the proper structure so that you can be able to determine what their commercial use cases are. So what that means is to set them up as commercial entities. For example, the way we have NNPC, for example, is a commercial entity and can be valued. You can do a cash flow valuation as accountants, one of the methods that accountants use in determining the value of a company, because it has a income statement and a balance sheet just like any other company. Because if you need to value a company, there are several methods that you can use. And the structure of NNPC allows a third party objective person to determine if, as long as they have access to the operations of the company, the financials of the company. So once you do the National Asset Register, the next step is now make sure that assets that are not properly structured, in this way corporatized, are now put in proper corporate structures that then makes them, enables them to operate commercially, and then makes it easy for a third party valuation on those assets to happen. So and this could impact our airports, it could impact our roads, it could impact railway, because then once you corporatize those assets and put them in the right corporate structure, and they start operating in that manner, they can actually go to the market and be able to raise capital on its own, on the back of it, or the valuation that's been ascribed to the infrastructure stock on their balance sheet.
So don't you think, from what you've explained now, that you're putting the cart before the horse, actually, that we're going ahead of ourselves? I don't know, I would really love to speak with the MD of MOFI moving forward, so that I will know what has really happened, at least in the last few months. But don't you think that we should be able to get an amount of what our infrastructure is worth? Because it seems, okay, we're all going up and down, yet we don't know what we own, as it were, in terms of even putting an amount to it.
No, I wouldn't say we don't know what we own. I mean, we are aware of what we own,
but we don't know how much.
There's still, I mean, all of this can happen at the same time. We can still ascribe value to it. We can still determine what the potential of these assets are if used in a commercial context. So we can still ascribe value to them.
Just abstract,
However,
abstract
no,
value?
but no, you can use the economic indicators and
Okay.
proxies that you can use. You can, I mean, looking at a road, for example, you could determine how much traffic goes on that road. And then if properly structured as a commercial corridor and you put
Tolling.
tolling or you put complementary infrastructure alongside, like an industrial park or a truck stop or whatnot, one can, be able to estimate what the economic potential of those investments could be and what that particular corridor could be worth in terms of contribution to the GDP, in terms of potential contribution in investments. So it's not that we have to wait till we have done all this work. It is necessary to continue to do this work, and it's not something that at some point we are going to say, oh, we're finished, because the country
It's
continues to
going to
build
grow
new
and
assets.
develop, yes.
So it's a living document that will continue to expand. So the National Register is never going to be complete, and it will always be a snapshot in time. But what it does, it helps decision making, because you now at least have a repository of what you own. It provides visibility to the commercial potential of public assets, and then provides an avenue for potential investors and the government to engage. So as we go on these trips, we have a playbook to show potential
Exactly.
investors into what opportunities and the potential of those opportunities within the Nigerian
That was
space.
why I asked the question at the beginning, for the president going on these trips and all of that. In fact, when I was also looking at the data some time ago, at the GCI, the Global Competitive Index, I think the last one I saw was for 2019, the last one that I read. I don't know if there's an updated, but I guess there should be an updated one. Nigeria ranks 130 out of 141 economies.
Right.
That's so low,
Yes.
in terms of a global competitive index, talking about quality infrastructure. Now, coming to Africa, I think according to the African Development Bank, in terms of African infrastructure development, Nigeria is ranked, I think, 24 out of 54 African countries. That's so low for a country that touts itself as the biggest economy in Africa and all of that. Now, that brings me to the question around the blueprint of this administration infrastructure.
Right.
Where you sit, do you have an idea of what the blueprint of this Tinubu's infrastructure agenda is? Like I mentioned at the beginning of the program, apart from the Lagos Coastal Calabar Coastal Road that has generated a lot of controversies, what is the blueprint of this administration in terms of infrastructure? Because infrastructure is huge. You have
Right.
aviation, you have ports, you have
Well,
power. Power minister is talking here and there. He will say this today, he will wake up tomorrow and say, no, I apologize, and all of that, I was misquoted. So what is the infrastructure blueprint of this administration?
Okay. So, and I think to answer that question, we need to take two steps back. And you mentioned something where Nigeria was ranked in terms of quality infrastructure and efficiency of our economy. And I think this speaks to one of the two major challenges that as a nation that Nigeria is currently facing. One being, as we are all familiar with, exchange rate volatility. And then the second being the productivity of our economy. Historically, our economy has always struggled in being productive. And that can be measured in terms of if you look at our GDP per capita compared to our peer countries, and if you look at the cost of doing business. And I think productivity has an impact on the other major issue, which is exchange rate volatility. Because the more productive we are, the more stable our macros will be. And infrastructure plays a huge role in making an economy productive, because it's the engine that drives access to market and enables the flow of commerce. And if commerce is flowing easily, that has an impact on how much capital and how capital is able to come into your country. And if capital is flowing easily, then that impacts on your macros. That impacts on a stable currency, which then has an impact on inflation, and so it goes. So, in recognition of this and the need to make the economy more productive, the president reconstituted the Presidential Infrastructure Development Fund, the Renewed Hope Infrastructure Fund. And you mentioned one of the critical projects, which is the Lagos Calabar Coastal Way. But that's just one corridor. There's actually 4 other corridors that it's part of that of the critical infrastructure that this fund will be looking at. And it's very key on why this corridor approach is being taken. Because what it does is it connects communities, it opens up the hinterland and the rural areas, which then enables us to unlock the huge endowments that are often in those areas. When we talk about agriculture, for example, a lot of the land are in the rural areas, but in most times they are not connected. When we talk about mineral resources, a lot of those mineral resources are in the hinterland, and without huge trade corridor, huge infrastructure investments across trade corridors, we're unable to unlock these potentials that are still stranded at this point. So by taking this corridor approach, you're able to connect markets across the major routes that commerce flows. And what is also important, it enables our export capacity development because it connects us to the other markets, the regional markets outside of Nigeria. So the Lagos to Calabar, for an instance, connects Cameroon from the Calabar end to Benin Republic on the Lagos end, which is then the beginning of one of the longest trade corridors in Africa, which is the Lagos-Abidjan corridor. So in one swell swoop, you are able to ease the flow of commerce all the way from Central Africa towards the end of what I will call Northwest Africa, all the way to Abidjan and Dakar. So that's a huge economic integration and positions us very well for when the Africa Free Trade Agreement takes off. And along those same lines, you have the Lagos-Kano corridor, which is one of the major corridors as well that this infrastructure fund is looking at. And what it does is, similar to the Lagos-Kano, Lagos-Calabar, it connects Niger Republic, which is a landlocked country. And currently, right now, a lot of its goods have been transited through Togo and Benin Republic, when in fact Nigeria presents more favorable attributes than these 2 countries. It provides an opportunity for them to use Nigeria as a transit country, which means goods and services moving through Nigeria and us being able to earn revenue off that. But more importantly, it lies along one of the oldest and most strongest commercial corridors we have in Africa, because it connects about 8 Nigerian states: Lagos, Ogun, Oyo, Kwara, Niger, Kano, and connects major, and you can see the states that I just mentioned, major commercial centers, Lagos, Kano being one, Ibadan, that are around this corridor. You're talking about a corridor with about 50-something million people and with huge infrastructure stock that already exists. I mean, we have a rail line, a 1,300 rail, narrow gauge rail line that already exists, that now need to be optimized for commercial purposes.
Now, I hear you, John. I understand what you're trying to say.
Right.
I don't think I need convincing because I understand what you're trying to say. But the issue is also the timing. The issue is about the revenue, the monies to build this. The issue is also some other dilapidated infrastructure.
Right.
Because that was part of why the president was criticized, or even the infrastructure around the Lagos-Calabar, for instance, to say, okay, we have a lot of roads. Now I'm talking about roads because it's one of infrastructures.
Right.
About all other roads that have not been completed? Complete it so that those of us within the country can even have access to markets, access to farms. People can, commute better. The east-west road, there are a lot of roads like that. The state of those roads, then going to Lagos-Calabar Coastal Road, that will cost over 15 trillion naira, that I'm not sure that this administration, the life cycle of this administration, will see to the end. You understand what I mean? That that is one point. The other point also is what are the strategies in place by this administration to be able to scatter, let me put it that way, to be able to scatter infrastructure across the regions of this country so that each region is not seen left out,
Right.
as it were. You understand what I mean?
Yeah, I understand what you're
Yes,
saying.
yes.
And I think with where I was going before,
Yes.
it answers all these questions. And let me tell you why.
Lagos,
Let me tell you
Calabar
why.
has answered the other, the southern part.
Right. Lagos
Les
Kano
Kano, yes, the northern.
goes all the way to north west, because it goes all the way from the southwest all the way to the northwest. You have the Sokoto Badagry, so it goes northeast, northwest proper, all the way down to the southwest. And the Lagos Calabar again goes through some of the southeast areas. You have the Port Harcourt Medugri that goes from all the way from the south to the northeast. So a lot of by connecting all these communities, it provides a backbone infrastructure that states can now key into. If a major railway is running through your state, what that does is it automatically enhances your agricultural capacity because your availability to evacuate your products is made easy. See, government cannot come in and say, because it's just not equipped to do that, to say, we're just going to make sesame. I mean, we can for certain strategic products. Or we're just going to make sesame to be the best, the most competitive, right? Or we're going to make maize to be the most competitive. What government can do is any business you decide to go into, those backbone infrastructure that you as a private sector should not be undertaking on your own will be made available at scale so that it provides almost a communal infrastructure or communal service that multiple people can be connected to and helps improve our economies of scale. So if I site my business along one of these major corridors, evacuation of my products or importation of inputs that I need, it makes it easier and reduces one of the biggest challenges that businesses feel, which is the cost of logistics. So what this does is it creates an enabling environment for the so-called multiplier effect to happen. Because oftentimes businesses have to traverse roads that are not, that are dilapidated, that increases the time and cost of transportation, which adds to inflation. I mean, most of our inflation is cost-push inflation, right? Which we then have to pass on to consumers. So by the federal government focusing on the critical and transformative projects, it now allows the states to now key into those projects by building link roads, link rail, and the enabling policies are in place that allows states now to build rail, to build link rail, to build inland dry ports, to build industrial parks. So, I mean, the federal government can't do it alone. It requires is a concert. And this backbone infrastructure, this critical infrastructure, enables all of that.
Now that brings me to the next question because we have about 5 to 6 minutes to end this session, to end this show actually. That brings me to the question around public-private partnership.
Right.
That's one. Then secondly, the funding to do this.
Right.
I know that there are fundings, in the budget also from even different NSIA, for example.
Right.
I don't know if you also speak with NSIA. NSIA, the Sovereign Investment
Authority.
They have the infrastructure fund. I think
Yes.
the last time I checked them up, I think about $1 billion or so. They've allocated more percentage to infrastructure fund. You also have other, let me say, regional. There's NDDC doing infrastructure, right. Northeast Development Commission doing infrastructure, a lot of that in terms of infrastructure funding. How do we secure funding for large infrastructure projects? 15 trillion now for Coastal Road. I don't know where that will come from. Meanwhile, we need about $35 billion annually to fill in our infrastructure gap, and I'm wondering where that will come from. Don't tell me borrowing as it were. That also comes in the earlier question I talked about PPP.
Right.
You know, there's public-private partnership as we end. If I have another question, I'll ask you.
Right.
So answer this in like 2
You know what is
minutes.
very interesting about this
Yeah.
is that there's actually a glut of capital in the global
Market
marketplace
space, yes.
seeking infrastructure projects, because infrastructure projects tend to be predictive,
Long-term.
you know, and they are long term. And for a lot of pension funds, I mean, that's an amazing asset because it often matches the long
Don't talk
term.
about pension
No,
now
no, no.
because of what just happened earlier this week. Or was it last week that the Minister of Finance was, you know. But anyway,
No, I mean,
just go ahead.
to go back to that, BlackRock. When BlackRock purchased the Global Infrastructure Partners, which, as we all know, is owned by a Nigerian, Bayo Ogunlesi, one of the key premise for that transaction was the fact that a lot of BlackRock investments are being held on behalf of pensions. And the long-term nature of Global Infrastructure Partners portfolio matches well with the type of long-term annuity cash flow that, you know, that a pension fund needs. So to come back to the question, there's a lot of capital available for that. As we often say, capital is fleet-footed and will go to areas where it can generate the highest return. As a government, what we need to do, and what we're doing, is to provide that enabling environment, right? To provide that visibility to the opportunities that exist, put the policies and regulations in place.
It's not seeming like that. But go ahead.
But you start,
Yeah.
right? The challenges we face are deeply rooted and multifaceted. And there have been systemic approaches that has been taken to address that on the systemic basis. And then there are targeted interventions that are also being taken to stimulate activities. And all this is designed to signal to investors that this is the road of travel. And what investors often like is they need to know where we're going.
They need
And
to know, but policies also need to align.
Yes. And to do that, one, you need to show the opportunities, then you need to show the policies that are available to ensure those opportunities can be unlocked. Now, talking about PPP, PPP is something that we've used a lot. If you look at some of the reforms that happened around the ports area, for example, where a lot of ports were concessioned and are being run on a PPP model. I mean, we have several successful examples of PPP, and PPP allows you to be able to generate capital without having to go to without borrowing. And that is a tool that we've used previously and a tool that I don't see no reason why we cannot continue to use. And a lot of these projects are contemplated on a PPP basis. Then you have concessions, you have different forms of public partnerships is the broader term, that can allow you to be able to bring in investment that doesn't necessarily rely on taking a sovereign debt. And what is key about government signaling and taking some of the initial investments, the reality is that private capital risk appetite is not the same with a government risk appetite. And they have a shorter tenor. They're looking at 5 years, some of them maybe 10 years. But government is forever. So government can absorb certain risk that private sector can't. So in certain cases, in building that Lagos to Calabar, there's nothing that says that the government will have to finish it. But the government have to signal and de-risk the projects, the major part of the project, to de-risk it first, so that it will allow private sector to now step in.
Okay. 1 more minute. Special advisor to the president on industry, trade, and investment. Speak to me in this 1 minute what your role really is and how you work with the Ministry of Industry, Trade, and Investment on the ease of doing business, because there's a lot of business. I've listened to many CEOs. In fact, the Africa CEO Forum just ended in Kigali. I was watching online where a lot of CEOs, of course, were really in business hostilities, total MD saying that they prefer Angola to Nigeria and all of that. I don't know if these are the things that you guys are supposed to be watching, to speak to the president about if they are not watching. So what exactly are you guys doing around the hostilities in our business environment? Don't give me the story about ease of doing business, because I know how many businesses have failed, even your small businesses. So in a very quick...
Well, it is quite a challenging environment right now. And it's to demonstrate the president's commitment to ease of business, doing business, PEBEC was reconstituted under the same leadership to continue. And a lot of times, what we often accuse the government of is lack of continuity. But in this instance, there's continuity. And you've seen instances where some policies have been put out, and when it's not well received, the administration has consulted and have reversed itself. There's nothing wrong in reversing yourself. I remember one of the Finance Act, some of the taxes that came had to be reversed. That's because the administration listened to the stakeholders. And Her Excellency, the Minister of Industry, Trade and Investment, has been holding consistent sessions with different segments of the different sectors in the economy and the trade associations. In fact, there was an event that was held last week in trying to explain what the ministry is doing and how that impacts the key stakeholders and how it resolves some of the challenges that they are facing.
Okay. I think, John, we could do another interview because it seems we just scratched the surface. You know, Nigeria matter no they finish.
It doesn't.
It doesn't at all.
But the opportunities are great. And it's, like I said, the problems are deep-rooted, and you have to attack them from a systemic as well as targeted standpoint.
Okay.
And all of this would, it may seem like we are not feeling the effect, but what often happens is that, like an iceberg, a lot of the work is being done on the ground.
Okay.
And we see that manifest.
I think we'll leave it at that. Thank you very much for coming.
Thank you very much for having me.
I've been speaking with John Uwajumogu, who is the Special Advisor to the President on Industry, Trade and Investment. We've been looking at infrastructure challenges and opportunities in Nigeria. That's the much we can take on today's edition of the program. I am Nancy Naji. Be the best you can be and be the change that you want to see. Still tune into this channel. We're coming up now with AIT reports at 2 p.m. You will be seeing Cardoso live on this channel in terms of the latest MPC meeting and the decisions in media briefing. I'll see you all again tomorrow. Bye now. Thank you for watching. In case this is your first time watching us, thank you. Don't forget to subscribe to our YouTube channel, drop your comments as well as like, and most of all, share our content. Bye.